Good morning, everyone. Microphone check. Screen check. Looks like everything's working correctly here, I think. Yeah. I know the VIP side's working well. I was doing a little bit of pre-check on that one. We had some updates on that side, so I always like making sure that things are working properly here, but I think everything is good to go here. Welcome, welcome, welcome. Hopefully everyone had a fantastic extended weekend. Going into Labor Day. Hopefully everyone had a good Labor Day. And it's kind of the last, it's bittersweet, right? It's sort of the last, so to speak, holiday before things start getting cold. And, and the other bigger holidays towards the end of the year begin kicking off. And, you know, next it's Thanksgiving and, you know, all of a sudden the holiday season's around the corner. It's crazy how fast things can go. And realize where we are right now going into quarter three. There's potentially a lot of action coming up here. But anyway, before we jump the gun, let's see here. All right, I think everything's working correctly here. Anyway, good morning. Welcome, welcome. Hopefully everyone had a fantastic weekend. Hopefully you're all rested up, ready to rock and roll. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. It's very important to go through and understand everything that is inside there. How's it going, Ace? Steven? Everybody else so far? Welcome, welcome. Good morning. Just a quick note for you all before we jump in today. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, also, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIP students, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, there are several different options to check out if you're looking to further your trading education and career. The easiest way to start out is just to join as a member on YouTube. It gets you in the chat room, and it gets you a little bit more behind the scenes on what's going on. Or if you want more information on how we do everything in terms of our trading approach with 19 hours of video course material and a ton more, swing over to the main page at ssftg.com. So whether you're here for the very first time or you're a VIP veteran over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what all is going on for today. The big thing, obviously, we are coming off the backs of a extended holiday weekend, right? So nobody's expecting today to be an early morning, early start kind of thing. You know, people usually rolling out of bed a little bit later than usual. Alarms went off, quote unquote, a little bit late, right? We've all been there. So, you know, expecting a little bit of a slower start. We'll see how things go, though. Don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. NASDAQ, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. Get those lips warmed up. It's a race every time. We've got the news calendar coming out. The first thing really that we have to worry about today is 10 o'clock, which does not help the sleepy morning feeling going on, that's for sure. With this sleepiness that we've got going on and the first news announcement not happening until 10 o'clock, I mean, really, what else is there? You know, I mean, there's not a whole lot else to worry about today, telling us that, you know, even if the alarms did go off late, it doesn't necessarily matter too much. First big news announcement at 10 o'clock? Okay. So it might be a sleepy morning. Or it may be a situation where a lot of traders realize the volume's going to be low so they can kick the volatility up and have some fun pre-market. We'll see. So far that obviously looks to be the case. Looking across the board here and kind of seeing what's going on, we do have a little bit of morning volatility, and looking at the bigger picture, it looks like there's like non-existent volatility. It's kind of crazy the difference that view can make. Here it looks like this thing's whipping all over the place. Here it looks like we've done nothing. The overall cycle to the upside realistically on the S&P is, again, we had to widen out and kind of look back and say, wait a minute, we had this little micro cycle here, but then it just kept going and going and going. Like, where did it stop? And that leads us to believe that we have a wider 5-wave cycle to the upside. And even that's not the prettiest thing, but given how gross wave 2 and even wave 1 arguably is, I'll give it. You know, like, okay, fine, sure, good enough. We've got wave 1, wave 2 is kind of nasty and gross. Wave 4 is usually going to be pretty quick, and to be fair, it was pretty quick. They basically an avalanche wedge with an L2, maybe L3 higher low, and then went screaming higher. So the bulls are looking for completion. We get out to the 3.8 and the market stalls there for a little while, but it ends up breaking through it. Next objective is going to be the 6.18, and it gets up to 5.7, falls a little bit short, then pulses up, makes it to the 6.1 and backs off. We get a new dip underneath the previous major swing. So that would lead me to believe that this high would be the completion of this fifth wave, given that they've reset back down a little bit. And if we zoom in a little bit closer, we can also see, although it's very, very small, on a corrective phase at least, we've got 1, 2, 3, 4, 5. Very small, like I said, but we do have a 5-wave corrective move back, which would suggest that, again, we have completed at least the 5-wave pulse to the upside, and maybe we're going sideways. And then this happened, right? Corrective phase, it wasn't much of a correction, more just sideways. This would be what you would call a rolling correction, or a spike in channel, or a higher low corrective phase. Whatever you want to call it, it's still making higher lows, higher highs, and it's not really pulling back. But if you look at it, it's still getting these nice A to B to kind of C to D little moves back and forth. They get an attempted wedge breakout above the highs, it fails, and then we continue a little bit further sideways, and in the end, we realize, wait a minute, this is nothing more than just a gigantic ABCD. And now we're back off to maybe the races. And this is where bulls need to see, like, okay, is this wave 1, wave 2, is this wave 3 impulse to the upside? Guess not. Well, crap. That doesn't help. Now that means that we're still in a sideways corrective phase, and we're likely in a complex corrective phase now, if that wasn't obvious enough. That usually means that we're probably going to have a POC pulsing to the upside, right? Let's see what's going on with the POC. Switch this to minutes so it doesn't take a half a century. With this much sideways, you'd expect it to be up here. And there it is. So the POC is up at 45.27 quarter. And that's the battle zone. That's the line in the sand. So long as the bulls can keep it above that, give or take, obviously. It's nothing's perfect in the markets, but so long as they can keep it above that 45.20s, we'll say, realistically, the bulls are in control. And if they start breaking underneath those 45.20s, maybe the bulls trap the 45.10s and get a V-bottom back up. But if that doesn't happen, there's really no support until, at minimum, the top of the previous wave, which is perfect, by the way, wave 4, right? The top of wave 4 to the bottom of wave 4, that's the next structural zone of interest. That's 4,500 down to 4,400. That's a 100-point zone. So I would rather look at this as definitive zones on the top or on the bottom. If it doesn't hold the top, it's probably going to go down to the bottom. And that's sort of the way that I'm looking at this at the moment, because that would be a valid attempt from the sellers. And if the sellers fail, that would be the launching pad that the bulls need to get that September rally that we were talking about in the blog post on SSFTG, right? So that's kind of that nice little the interlude if they want to hold it. Now, if they start dipping back underneath that, different story. Things change a little bit. We'll see. How's it going, Seven? Welcome. Over on gold, golly jeebs. Gold is just a different breed of a chart right now. Obviously, this is trying to get that V-bottom going, and the big thing that has to happen for a V-bottom, rather, is they've got to break above the start of the V. Right? That's how they make the V. Well, in this case, the top of the short-term V-top is right there, which they did break. The next one is up here, and realistically, my clock is in the way, the bigger top is over here. So they did accomplish, at the very least, the minimum that they had to accomplish to prove that this was a V-bottom. They could have done better, but you can see, man, they had to fight tooth and nail to get that thing all the way up to the highs. It wouldn't be a surprise at all to see these buyers rest for a little bit and say, okay, geez, oh Pete, we got the job done. Whoo! Let's take a break. Right? And where do they usually take a break to? Well, they're usually going to pull back to a previous POC, a previous balance point, a previous structure zone, something of interest. Well, what better than a previous POC that's hanging out down there? Let's roll this a little further forward here. Get this on minute. Right up there. And we've got the POC, which is at 1817.2. Now the market's starting to break underneath this. This makes sense. They finally got the minimum objective. Like, holy crap, finally. Give me a little bit of a break. Like a zone of massive interest right now because of this. This is one of my favorite ones, and I've got to make a video about this sooner than later. But there's this, first off, confirmed swing low. Secondary confirmed swing low. The market loves trapping these zones because they know traders are trailing their stops up. They don't know where else to put them. So the market comes down into this zone, takes everyone out, rips all the way back up to the highs, and it allows traders to buy with incredibly small risk with very large reward on the table. 2 to 1, 3, 4, 7 to 1. These can offer up some massive zones depending on how cheap you can get it. So something to consider in the way that this is forming right now on gold. Yes, they are breaking below a POC, and yes, this is a valid attempt. And likely, if the market does want to dip lower, the lower zone of interest is going to be down here towards the 1790s. The volume supports it. That would also offer up an incredible risk versus reward. Sheesh. What is that? Hang on. Go to the upper bounds of that to... Not quite 3 to 1. It's a bit of a bummer. How about a slight fiddly-dee on the entry? Ooh, I didn't even mean to rhyme that, but sure. And you know what? Right there. And that almost fits that 3 to 1 just a little bit. Am I getting too greedy? I mean, that fits it in perfect right there. I'll compromise. I'll go a little higher than I want to, but low enough where it's still a value. Really? Can you just put it on the level, please? Oh, rounding. Okay. Sure. There we go. That offers up downsides, and a 3 to 1 fits on the top side. I like that. Looks nice. Probability of success, maybe 30%, but that's fine. Long-term probability, if you were to take that 100 times in a row at 30%, it favors the math. So it's a viable setup. Looking at crude oil, we've got mostly sideways action. There's not a whole lot going on, really. But, you know, all things considered, nice juke off the bottom with a strong rotation up. Looks like things are kind of peaking a little bit. Maybe shifting volume. Hey, Zach, how's it going? If we look across from the bottom to the top, they made a lower high, technically, so that is the impulse high up here. That wasn't far enough. I did notice when I shifted this to minute that it did work, which is weird. So tick... Oh, no, never mind. Just kidding. Here, I thought I fixed the bug. Nope. So we have this zone of interest where the market on crude oil left the POC behind. And we know that they had that valid attempt right here. The sellers tried getting it to go lower, broke back above, and now we're rallying higher. If the bulls were going to try to continue this, then we would expect that they would have this higher low continuation. There's maybe a little bit of a wedge, but the upside would be the anticipated breakout. And it didn't. So the fact that it didn't leads me to believe that we're probably going to get 2 legs to the downside. And the most recent obvious leg, we'll just measure this one up. Right? So if we're looking for downside objectives, that gives us a downside objective of 67.23-ish, which is right back to those previous lows. It's back down to the cliff, if you will. And the reason I call it the cliff is because if this doesn't support it, what else is there? You know, there's not a whole lot. I mean, maybe down at 65.50, I guess, on that last volume node. Yikes. This thing's staring off the edge of a cliff. The risk reward is phenomenal there, because really you're looking at like this versus what, at minimum back to settlement, back to the POC. So here again, you know, I mean, I like it from a risk perspective, primarily because the risk is incredibly small. Likelihood of success is also very small, but that's because we're looking at a 5 to 1 move. So, I mean, the probability of success, if this was, let's say this was 27%, let's take 25% likely. 25 times out of 100, you're making 500. And the other 75 times, you're losing 100. I don't know about you, but 7,500 minus 12,500 is incredibly good trader's math. So, that's totally fine with me. Okay. I'm not going to expect to win that trade. To me, as soon as I put that order on the table, it's already cost me the risk. My job from there is, if it gets filled, to make it back. Possible is something, though. Over on the euro, Nice little dive to the downside with a continuation drive. We've got some movement, maybe in the form of a channel, right? But that channel, man, that thing really started angling up, and obviously kind of a spike in channel, maybe kicking off like this. It originally fit the top. Let me highlight it a little bit here. So the fact that we tried transitioning to this more bullish channel and now we're failing doesn't mean that the bulls are done. It just means that they're kind of taking a break from this more aggressive pattern, and they're likely going to revert back to the previous structure, right? So going back down to the lows of the orange channel, or potentially maybe even a little bit lower, since if we look at the orange channel, they did technically overshoot it, then taking that distance and measuring that distance down would create an overshoot roughly back down to these lows. And there again, it's a picture-perfect spot for a zone of interest for the market to try to pick up. Now, does volume coincide? Let's see where that wants to line up. Of course, God forbid my volume works on the first time, right? Jeez. One of these days, back in my day, NinjaTrader used to work the first time. 1.18030 fits. Wow, that fits nice. That's going to be the hot spot for sure. Maybe, maybe a little bit above it just because of the way that this market works and the fact that these are half tick costs. So the risk parameters then would be, I mean, again, likelihood of success is garbage, but it fits a 3-to-1 at the very least. Man, I would really, it depends on where they get it. Let me move this over so the timing, so I can see the timing here. Because I would really prefer, if they're going to hit it sooner than later, I would really prefer to be lower, because then I can fit my targets inside the retest of the channel. I know it's a heck of a lot more greedy, but I mean, realistically, that just makes more sense. So I think that is much more favorable. It fits a 3-to-1 inside the highs. We already know the probability, and that's why we already know the probability of the trade sucks. that's very odd. We already know. Like, got it, cool. So I've got to look at this in a different perspective and say, well, if that's the case, then how can we make this be a bit more beneficial? And I think it's more beneficial to get a better entry. So that also fits down in the 1.1800s. Again, it might be greedy and I might not get the fill down there, but I think it's just more favorable there. We'll see. Over on Bitcoin, obviously I can't place any trades or anything on this one, but as far as Bitcoin is concerned, realistically, this thing is, we're finally starting to ramp up to a new high, right? This was that big pulse. But the thing that always makes me nervous is every time we come into the market and it's made a high really late in the session, and we look at it in settlements like way up in the stratosphere from where the market is, there's going to be one of two scenarios that happens here. The market is either going to straight up just V-bottom and go racing back up to the highs, or this is the start of a big move to the downside. As far as larger momentum to the downside, we are already trapping an inside swing, so another major swing point would be down here at the 49,400s, maybe even down to the 48,400s in that area. Right, those are kind of the zones of interest on a larger pullback. And if they want to go deeper than that, then you're talking, 46,000s down there. So this first pullback, I mean, I know when you look at a really fast time frame, it looks extreme, but realistically, this is not a whole lot. Ethereum's got a little more weight behind it, but that makes more sense because Ethereum's been nonstop going to the upside. This also makes a lot more sense given where we're finding this support. And look at what's happening here. If the bulls are trying to get a continuation, we have a small little pennant. We already know that a pennant formation in terms of a reversal can't be much more than 33% likelihood, so adjust accordingly. But when you have this kind of situation, this is the hot spot. Buyers know that they don't have to risk a whole lot for a potential massive rally. I mean, we're talking Ethereum, right? Ethereum, to me, and like we've been talking about for years now, has much more potential than that of Bitcoin. That said, there are other ones that are creeping up to the party, like ADA, and, you know, not that that's a new one on the block either, but there are a lot of other ones that are definitely jumping up on the list. And, you know, when I see these pullbacks, I like looking at the comparisons. Like, okay, well, if Ethereum is pulling back really aggressively, what's the stance on some of the counterpart markets, right? How about ADA or Neo or some of the other developer chains? How are they looking? Are they pulling back as well? Or maybe there's a value dip that one's pulling back a bit more aggressively. That's where you can really start playing the what am I thinking of? Correlations. That's the word I'm looking for. You can have a lot of fun with those. Anyway, shifting over to the NASDAQ now. Looking at the daily perspective, we still do not have an L1 pullback. If we look at where the L1 is, I know it's on there somewhere. If we go up to, is this higher? Or is that lower? Which one's higher? Stop. Which one's higher? The close 702, the open 701. All right. Well, and that one it is. So as far as the L1 is concerned, we've got the first L1 pullback, which would be down at 15,005, basically 500. Almost perfect. Man, almost perfect in terms of structural supports, right around that psychological level. If that breaks, then an L2 is likely going to be around 15,000, which fits very nicely. Let's see here. Man, alive. From the bigger picture, you know, hanging out from the stratosphere, if this thing ever wants to get a value pullback, then you're looking at, what, 13,000, 12,800s would be down to like L1, L2. Get the right thing here. Yeah. So, I mean, I have concerns if it does want to start hitting the gas pedal to the downside, given how constricted this thing is, but you know, it almost feels like it needs one gigantic blow-off candle to really satisfy the move and reach out and grab some targets. And I think some logical targets are 16,000, 16,250s like we've been talking about. Makes sense. We'll see what they want to do with that. But looking at the 15-minute perspective and looking at where we are, all things considered, very similar to the S&P in that we've got the completion of the 5-wave cycle. Mark's just going a bit sideways. And, you know, again, my next question then would be, all right, well, was this nothing more than just an A, B, C, D move, and now we're off to the races? But, well, are we? Like, we haven't gone higher. There's some problems with that. So it's starting to make me think, well, this may just be a 5-wave super sideways move, but you've got the first move down, the second move down, third move down, and they're just going to be looking to constrict this wedge a bit further down towards the base. And even better would be a nice little trap underneath the 50s. That would be the hot spot. The risk would be 15,511s, and if it starts breaking underneath that, then 15,400s are next, so that's the zone. And there goes the zone. Where'd it go? Is it on here? There it is. All right. Looking at what's been going on so far this morning, and kind of kicking off, you know, yesterday, although technically it was a holiday, the market was open, had a nice little rally up, 15,710s or so up on the highs. What did they actually top out at? 708.75. And lower high rolled all the way to the downside. Now we're continuing. If we look at that cycle and everything that's sort of happened since Sunday, we can really see that we're kind of opening up right where it was. Nothing changed, right? So a lot of traders may be frustrated that they missed that rally up if they weren't able to trade on Monday, but realistically, all things considered, it's not like they're going to be disappointed in the sense that they're opening with a huge gap up or down, right? They didn't miss out on it, or they're not massively underwater, anything like that. There are some considerations in that this zone, right? Remember, from the 15-minute perspective, is going to be kind of the short-term cliff, if you will. So the bulls have to hold here. And if they're going to hold here, then we should be off back to the highs again. If they're not, then we're back down to the lows. Oops. We'll see what they're able to do, but I mean, from a cycle perspective, off the top, that's obviously an L5. The L5 leading into an L, usually an L5 is going to be an L2. You can see that the L2 sellers did give it a valid attempt. Very nice shot off the L2s. And realistically, from an actual risk perspective, probably got a 3-to-1, right? Yeah. So they did get a 3-to-1, at least from an actual risk to the downside. They didn't have to break the lows. And now we're rotating back up. They hit an L3 before breaking lower. It's a bit disappointing. Like, crap, really? Like L3? That wasn't supposed to happen. So that's going to make a lot of traders concerned on this next dive down. But the next dive down hits another L3. So now it's, well, we've got an L3 into an L3. Guess what? Looking for another L3. If the L3 fails, L4 would be next. If sellers are going to take it back to the downside, that would be the most logical point of interest that they do it in, at least. Now, from a bull's perspective, we've got 3 very obvious higher lows that are beginning to build here. And if we go from the top all the way down to the bottom, we've got the POC, which is up at the top. And then let's continue it on to today. Oh, it's still up at the top. Okay. So the POC got kind of left behind. What about all of Sunday? Still up at the highs. Okay. That almost makes me think that a lot of, you know, the vindictive side of me starts lighting up when I see stuff like that. Like, wait. Now, the reason I say that is because a lot of traders who weren't able to trade the holiday, the largest volume across all of it, including going into almost 9:30 in 4 minutes, and it still hasn't shifted the volume off of the highs. That makes me think that they used a holiday to dump a boatload of contracts. I mean, if it does, I don't know, that adds a little bit of a bearish tone to it. We'll see. If they shift the POC, then things will change. They have the open around the corner that may bring that necessary volume to get the job done. Now, just saying, again, from the bull's perspective here, if these sellers were looking for an L1 continuation, right, they were disappointed by the L3. So, I mean, realistically, if they're disappointed by the L3 and we have a really strong breakdown, what was their first response? Well, the first response was off of an L1. Very aggressively off of an L1. Like, no thought. It was either a limit order or you didn't get it. It's just gone. So aggressive selling off of the L1. Sellers would realistically believe that to continue. And the next time around, when we look a bit further down, we get into the L1. Sellers start even piling in a bit early. We get to the L1. Nobody shows up. Those sellers start jumping out at break even. Let me get the candles a little wider. 9:28 around the corner here, the next big moving time, usually. So you can see the sellers who would have tried there, they got out at break even. The sellers who sold the top of L1 had a little bit to deal with, but all things considered, had a nice roll to the downside, although they didn't make a new low. So if these sellers were holding on for a new low, they were disappointed. They even maybe re-upped into their positions. So look what happened when the market came back and allowed them to get out at break even. It bounced. So that would suggest then that those sellers have gotten out a little bit. The only other sellers that are left are the ones down here. Now, keeping that in mind, notice what we just came down to. Right there. So seeing this respond, if we start getting higher highs, I mean, this might be the rotation point that bulls are looking for to keep it going. Off of the base, all things being fair, we got to look at it from the bear side too. We've got from the bottom to top, that was the POC attempt, move to the downside underneath 640s. It's not doing so hot. Might have some issues here. 9:29 around the corner. There you go. 1 minute until the open. As far as the S&P is concerned, looking at the pre-market, we are way down there. We're going to be opening up with a big outside gap to the downside. That outside gap to the downside, I mean, it is coming back to kind of finish a lot of jobs, honestly. There's an unfilled gap back here that, you know, there's just kind of coming back to a massive zone of congestion. We're right in the middle of that, by the way. There's a lot of support down here, you know, multiple days of congestion from there. So realistically, I got to be approaching this from the mentality that we're opening up into support initially. How they respond to that support, well, we'll have to wait and see. But, you know, the open's right around the corner here, and at the moment, we're sitting on a big old gap to the downside. Seems like we were talking about, as expected, the earlier L1s, they're getting out. This is their break-even rally going into the open. Now, if bears are getting out at break-even, then we have to ask ourselves, why would they be getting out? Right? Why are they exiting? And I say break even because the market bounced off of this zone, and realistically that means that the bears lost that fight. We are making a new high. Maybe things have changed. Continuing to make new highs. POC is shifted up now, 658.75. Larger POC still up in the 701s. The bulls are making an attempt. I mean, we've got a nice rotation off of the lows. It was a, I mean, L4 to the tick, right? So an L4 break, if they can break, right? They've got to break above the highs with some gumption here. But L1s are the anticipated response. I would like to see this break the high a bit more, you know. Give me some proof. That'd be nice. This isn't really enough for me to want to hit an L1. Okay. Well, they didn't pull back to an L1 anyway, so it didn't even matter. All right, now we're starting to get into a little bit more interest here. A pullback into the L1s now would be also on top of the previous POC. There's a lot of stuff that's stacking up inside there, and they're attempting to get that pop to the upside. So L1s will be looking for a continuation to the upside so long as it doesn't break into the L2s. And that was the break into the L2, so I'll utilize that final pop there to exit the rest of it and just take the loss on it. Again, I wanted to see it hold the L1. It's not worth holding on to. This little dip into an L2 is more likely the precursor before a larger move down. I'm not... See, it's just not worth holding risk anymore. This isn't fitting the pattern. It needed to hold an L4 into an L1. Couldn't do it. No thanks. I have to wait for a reset or something that's a bit cleaner. POC is jumping around. If the bulls did come in, they're obviously realizing that they were wrong. They're kind of late to the party here, but the bears are potentially churning lower for a breakdown. Nice little pulse to the upside. Honestly, I'm looking at this, that the bulls are going to utilize this as a shot to the downside to get out of their break-evens if they're long and attempt to get this to pulse lower. Looking for a continuation slide to the downside. I'd like to see them break below the 35s, preferably a little bit further. I mean, a new swing low is... it's nice, but I mean, realistically, this should have more juice in the tank than this. Yeah, now that's a nice bear bar right there. Nice little slide and support, good spot for a target. I like this little zone in the 40s. I was only able to grab the one, so there's not much I can do about that, but, I mean, that covered the majority of the losses on 3 contracts with just 1. I mean, I'm okay with that. See if we can get a little bit more continuation down now that we've got a POC flip. Remember, we haven't broken the lows yet, so technically, the bulls still have a shot. I was only able to get 1 contract on the flip, and I didn't really want to increase the risk, but... nice continuation down. You can see a lot of traders exited where we did, and now we're continuing down to the next targets, which is below the lows in the lower 30s. After that, remember where we are, right? I mean, this is a big spot. We're back to physically test. They missed it last time. Now we're getting an actual test of this L1. So this bull bounce to the upside, I mean, realistically, this is something of a something to consider. I'm going to look at it from an impulse perspective to play it safe. From the top to the bottom, the shift point is 52.75. Continuation break further. They tried shifting the POC down. Didn't quite work yet. Can they get back above it? Ooh. Okay, well, they got back above it. If the bulls are going to take it, this is their launch pad to try to get the job done. And I like this because of the amount of risk versus the potential reward. The risk versus reward here is freaking crazy. All the way back up to the potential highs 2-to-1 for the first objectives. The next objectives being quite a bit even further, really. I mean, if we start breaking underneath these, back up to the POC, if they start cracking above that with some fortitude, then we could be on that launch pad for the upswing. But the probability at the moment is low, so... First objective is going to be 51.25. I'm going to go a little bit ahead of the POC just to play it safe. I mean, it'll be in that zone. Looking for the rotation off for the targets there. I knew they were going to front run that stupid thing. They do it every frickin' time. I jumped ship a little bit early because they play this shizy game every frickin' time they get close to the 2-to-1. They're like, just kidding. They run away from it. It's usually a pullback for break-evens, but that's a game that they've been playing lately, and I'm not really willing to play ball. This is the break-even dip that buyers usually reload on. We've already gotten the objective back up towards the 2-to-1, so, I mean, realistically, this break-even test, I mean, I gotta see them show up. Wow, they showed up to the party. Jeez. All right. We're good. We're good. Holy moly, what a bull bar. Golly gee willikers, Batman. They hit that break-even, and how many people do you think put their stops at break-even? Whoopsie! This is usually where they finish the drive up to 2-to-1. It'll probably pause at the 2-to-1 because the buyers reloaded on the dip and they're taking profit into this continuation. But usually the consolidation up here is short-lived, and then it continues and finishes the job up to 3-to-1s and even a little bit further. So I'm looking for that 3-to-1 pulse up to 54.50s and, you know, again, maybe even a little bit further. I don't have any more of the contracts, though, so looking at this pulse to the upside, breaking back underneath the POC, fine. Good enough. It's about a 2.5-to-1, and I really wasn't willing to sacrifice it closing back underneath the POC and losing ground. We don't have enough proof from the bulls for me to give them the benefit of the doubt yet. Nice transition phase, though. Back up into the POC. Now, if you have more I mean, I was only able to grab 2. Next objectives would be, well, they kind of already hit it, I guess, but up into the previous POC. Next target area would be breaking above the highs, really. If they can get above the 670s, then it's kind of game on. Looking at this from across the entire thing, because we haven't broken a new low or a new high. We just kind of got a wedge. All things considered, from the bottom up, we've got an L5. So next pullback would usually be like an L2. The other side of things doesn't really have a whole lot to work with. Look at the S&P. I mean, geez, oh Pete's. The Nasdaq's just getting collapsed on right now, and well, first 5-minute volume is 45.25 on the S&P. Didn't have a chance to do it on the Nasdaq yet. Hang on. This one's going to be a choppy one, huh? Oh, I guess not. First 5-minute POC, 59.50. Developed POC, 652.50. Ooh, I tell you what, this 5-minute bar is going to be very important. Why do you think the ES and the Nasdaq have been diverging so much? I mean, we have a big... there's a lot of earnings coming up, if I'm 100%. And a lot of earnings... Well, where do most people look if they want to play some earnings? Right? You look at tech sector. Right? The tech sector is where the earnings go freaking crazy. You know, aside from the occasional few, there are some definite good moves on, you know, like Boeing and stuff. But if you want to play some earnings moves, you hit the tech sector. And well, that's kind of what we're seeing. We're seeing a lot of volume, a lot of volatility hitting into the tech sector, which would affect the Nasdaq, while the S&P is kind of lagging behind. They end up going in the same direction. But man alive, the Nasdaq definitely jumps quick. And you wouldn't think, but a lot of times the Nasdaq lately, at least, has been leading the S&P by, you know, potentially like a day ahead. That's the thing. Like, it's just way behind. They got to make a new high above 670, or I'm not really interested in the bulls. I gave them a shot. I mean, multiple contracts if you're still running it, sure. But otherwise, I'm a-waiting. Give me a dip-a-dip. It's going to be an L5 flip, so an L2 makes a lot more sense on a new high. Market's not really doing a ton, but still wedging. We got to break that new high in order to prove it for the bulls. New high above 670. This has the prerequisites for a reversal. It's got the L5. Some of the best reversals happen off of L5s. In the nearer term, beautiful continuation so far to the upside. They have been kind of playing around in this area, but you'll notice one thing that we talk about a lot: when they realize that that target area has been successfully breached, they'll start re-upping in that area, so they are effectively still long. Which looks to be the case, and they're usually running for the next objective. Next target in that case, well, this was a 2.5, almost 3 to 1, so the next objective probably a 5 to 1 then, right? Sheesh, did they make it to a 5 to 1? What? No, they didn't make it a 5 to 1. Almost. That might be what this next pulse to the upside is going to be if there is another move. Still haven't broken a previous high, though. They've got some problems. If they can, well, the reason why I'm interested in the highs, if they break above the highs, is because at that point it creates a situation where we have an L2 continuation off of a reversal on an L5. Now, that's a mouthful, I know. So what that means effectively is that we've reversed off of an L5 and the usual follow-up is an L2. And if that's going to be the case and the market does end up flowing higher, then we're looking at a continuation phase that would be back up towards at least the inside highs. There's a lot of room for that, right? So that's why I like the upside, because as far as the risk is concerned, where we are right now, we're still okay. I mean, it could be better. I wish it was a little lower to form this patterning stuff, but it still offers up opportunities up to the highs that still fit close to a 2-to-1. If this loses its ground and breaks, then we're probably going down to the 550s. Which is why they got to break the high. We need that proof. Like, all right, I see you. I see what you want to try to do, but can you do it? POC's up at the top? Really? Well, the impulse POC on the entire move is way up at the highs, which is more likely going to be resistance. That's basically settlement. If we continue this to the most recent higher low, POC hasn't changed. The POC just changed just now. Now it's starting to flow underneath it. I don't even think that fits as a scalp, does it? No, it doesn't even fit for a scalp. If they had their stop above the highs. It's just not a trade that I can take. I mean, you can see the shorts are trying to get it to rotate down, but man, that's just not worth the risk. No thanks. I'll have to let that one just fly by. How about some of the others? Oh, crude oil, you're so mean. Actually, you know, on crude, I know it's frustrating, but it honestly doesn't hurt my feelings, because if we're looking across the board here, this just creates a scenario that fits even better. Now we've got a possible supportive wedge bottom, or channel bottom. So, it's okay. It doesn't hurt my feelings. S&P's losing ground. Yikes. They lost 27.25. Gold's next zone, we're still a metric. I mean, we're so far away from that right now. Same with the euro, way far away. Crude oil was close. Now it's very far away. We'll see if it comes back. No new low underneath 625. Here the market sits. Not really changing a whole lot, honestly. I mean, look at where this is right now. We've got 2 minutes left on this current 5-minute bar, and we were talking about how the POC was up here. Now we've got the POC downshifted back here, but look at where this candle's starting to close. I mean, we almost have 2 minutes yet, so give it time. But if we close above this POC, this could be a really obvious rejection point that, again, is more supportive of the bulls. Structurally, it's just, we're not anywhere. Just in the middle of nowhere. It just doesn't make sense to be the bottom right now. Especially not with, after the bulls trying so hard and failing, and now they've got a downshifted POC and losing underneath that. And I mean, if we lose a new low, it's kind of game over for the bulls. The other side, I know we were talking about an L5 off the base, but we also have an L5 off of the top. So if we do get a really strong breakdown, an L2 in the opposite side of things, it fits the bill. They got to break a new low, though. So if you go back to a situation like that last rally up, let's say you had more contracts and you were going for a 5-to-1, how would you manage it now that it's pulling all the way back to break even? Would you take it as a loss? Would you go to break even? That's a really good question. So when you're looking at this kind of area, if, let's say as an example, you were still long in this zone, right? Maybe you bought down here and, you know, you got a couple contracts or whatever, and you took one off here, you got one off there, and, you know, maybe you got another one off on this next pulse, and you're waiting for the 5-to-1, and your next order is up here, and it just doesn't make it. Not even close enough for you to necessarily exit, and it starts pulling back. Right, well, at the time, you wouldn't have seen all of this. So a lot of traders will be looking at that thinking, all right, well, it's still got time. They're not going to give up on it immediately. It starts pulling back underneath, like, okay, that's not great. You know, let's see what happens internally within this structure. The market's pulling back. We're pulling back. We got an impulse low. The POC's down at the bottom. We have another new low. The POC is down here, and we can see that it comes back, hits it, closing on top of it. Uh-oh. Big bear bar rejection back down. Uh-oh. Right? All right. Well, how about the next impulse low? Oof, didn't change. All right. Well, what about after the next drive down? Nope, didn't change. Next drive down, didn't change. So you see, when they start losing the POC in those aggressive moves trying to get things going, they start losing hope. It doesn't mean that everybody jumps ship. It takes a lot of traders a lot of time. It might not necessarily be immediately. They might not be exiting here or here. But, you know, by the time it's become obvious that your pattern is now wrong, I'm no longer interested in holding. And at this point in time, if this was going to be a reversal off the bottom, and you've gotten, you know, 1, 2, 3, 4-to-1 to the upside, hasn't quite made it up to that 5-to-1, they've got the POC shifting, I want to see this do this. I want the POC to be support. So when they start cutting underneath it, I'm not going to wait until they come back to break even. I would rather exit and wait to see what happens. I've already taken off everything else. Why give up the last portion? Now, the other side of things could be more on a lax, or I guess strict, depends on which way you look at it, I suppose, side of things where it's just, here's my stop, it's underneath the low, here's my target, it's where it's supposed to be. One of them's going to get hit. Period. Leave it as is. You know, but when we start losing ground and they're pulling back after we've hit a 3-to-1, 4-to-1, and now we're losing POC and we're starting to drive down, I'm going to give it a lot of time because you've already built in 2, 3, 4-to-1 to the upside. Don't give up on it super fast, right? Be very patient with winning trades. But when you see, like, as an example, over to me, like, late to the party, I give it a lot of time, sometimes too much time. The market pulls down something like this, good bull rally up. Okay, maybe this is their time to shine. Maybe I was just early. And then it dunks down, another lower high, starting to drive down. I'm thinking, like, I might want to give up over here. You know, it's way late, and yeah, you're giving up a lot more, but that's okay. Because realistically, from your entry point, it's just a little underneath break even. It's not that much. Considering that you already hit, 2, 3, 4-to-1 to the upside. I'll give it a little wiggle room. It doesn't hurt my feelings. But I'm not going to let it turn into a massive losing position because I got my ego in the way. And I'm tripping over it, trying to build into a massive position that doesn't need to be there. So, if that makes sense. We have a new low. A new low doesn't, it doesn't really, doesn't help the bulls. The bulls needed that break above the top. And that's why it's so important to wait for that proof, right? Imagine trying to buy in this early thinking, yes, I'm going to get in early. I'm going to save myself some money on my stop distance. Okay, but remember, when you're getting in early and you're reducing the size of your stop, what does that also mean? You're trading probability. Boop, 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 doo. People don't like that pill. That pill doesn't taste good. Harder to swallow. New break to the downside, although minor in scale. This does demonstrate that the sellers are back, or, well, not back. They're still in control on this downswing. Got 10 o'clock right around the corner here in about 5-6 minutes or so. Feel free to get those questions in. We'll get those covered for you. And then at 10 o'clock, we'll transition over into the extended session and VIP session. Get that going. Probability equals scalp. Exactly. Yep. I mean, to me, I I didn't even really see it fitting, to be honest. I mean, yeah, but hey, I guess if their stop was above this high, it fits. Hot diggity. Would you look, you rotten SO... okay. I totally missed that one. I don't... Look... So you remember... remember before when I was saying, I like this short, but it just doesn't even fit the risk? That's because my stop was above the overall highs. We were beginning the cycle over here, and I totally forgot that the session started today over here. So I was looking at the half to one scale where it is now, which technically would have been successful. Just as a side note, yes, it would have been successful. But had I been looking at the appropriate stop, which would have been above this, that would have offered up a viable reason to short more along the lines. And you can see this is their half to one target. And you can't tell me that they didn't take it. Whew. Okay, now let's see if they want to re-up. Do the sellers want to hold it down there? That's so... I'm so irritated by that. Not really. You can't let it mess with you, but that is frustrating. Good morning, Jay. Is it strange that my realized P&L hasn't raced over the weekend or holiday? Holidays are always weird. I wouldn't think too much of it until after today. If it doesn't change after today's settlement, which should be at 1700 Eastern, if it doesn't change after that, then I would be a little bit concerned. But because of the holiday, because of offsets and all of that, I wouldn't be too worried about it right now, as long as there's no changes in your P&L, you know, like not like all of a sudden you magically just lost $100 or something, you know what I mean? Then obviously there'd be a problem that you'd want to call about. But as long as everything's normal, then I wouldn't worry about it until after today's settlement. Holidays are always weird. Who knows? Maybe someone wasn't in the office to switch it, you know, I don't know, but... The machine didn't work. Breaking back down underneath the POC. Technically, the impulse POC is to the downside. We have broken underneath it with this slide lower. What a bounce. There's a switch. Yeah, so before, I don't remember when they made the change in the hours. It was a couple months ago now. But now at 1700, when the market closes, 5 p.m. Eastern, it pauses for, and that's what you can see over here, right? So from the RTH perspective, we've got 1300. What? Oh, yeah, duh. Yesterday was a holiday. Herpader, that's why. So if you look at yesterday, the close was at 1300 because yesterday was a holiday. The actual last, market close was over here at 1700, and that was at 45.3375. So if you look at it at in the 2000 tick chart, and you go back to that period in time, so if you find, let's go back over here to... That one goes into the weekend. So let's go over here, 1700, right there. So on my chart, it's this kind of horizontal bluish purple line right there. That's when the market closes, and you'll notice that candle is at 1659.59, so 1700, right? Closes at 1700. The next candle closes at 1835. I know that's kind of funky, but that's because it's a 2000 tick chart. If you were to look at a time base, it opens at 6 p.m., so 1800 Eastern, which means that there's a close within there from 5 to 6, basically. That's like the settlement period where they figure out where things are at. And when things open back up again, then you're all hunky-dory, ready to go. That's the switch, if you will. Some brokers switch at midnight. Some brokers switch at the 5 p.m. settlement price or close or whatever. Every broker's different. You know, I mean, it depends on which one you're using. going into 10 o'clock. This is the first news announcement. And a little bit of volatility ahead of this news announcement too. POC on the S&P is shifting to the downside if we're looking at the NASDAQ on the 5-minute. Well, they closed above it and then way closed underneath it, and now immediately closed back above it again. Longs will be trying to pick it back up at 36.75 for a continuation higher. I really thought you meant there was a switch to go up or down. Oh, good Lord, no. No. I mean, if you find it, you better let me know. I'm gonna be upset if I find out you find it, you didn't share it with me. Ooh, man, we're gonna have words. All right, it's 10 o'clock. Let's do a switch over. I don't see any other questions. Remember, 10 o'clock is also the first and really only big news announcement that we have today. So let's jump over to the extended session. And if I miss any questions on the morning side of things, you can always drop them in the comments below on YouTube, or if you need to send them to me via email, jhb@ssftg.com. For the rest of you who are hanging out, just chill for a second, and we'll rotate over. And yeah, for the rest of you, I hope you had a great morning, and we will see you all tomorrow. Have a good one. We'll talk to you all later. Thanks.